So just yesterday, NIO launched the NIO Power Up Partner or Battery Swap franchising partnership with 3 different business models to choose from. But what does this all mean for NIO investors, NIO shareholders? This is, of course, the best news ever. All right. Actually, NIO has had a lot of these partners before. At the event, you got a live signing, and these are all like different companies that were actually sign up for this franchising partnership deal. All right, so it's just basically you and I, or even bigger investment funds or bigger energy companies, they can all join in, and NIO's opening the whole entire business of battery swap up to everybody as long as you got money. And first of all, this is very good in the fact that NIO's going to be actually taking in money, all right, in the form of investment. So they might count that as revenue to build out those swap stations. So say company A decides to partner up, and then they invest a couple $1 million, and NIO builds that swap station for them, and that counts towards NIO's revenue. So instead of NIO before having to fork out all the money and then also, pay rent, do all that kind of stuff, and then spend money on these swap stations and then build them out, they can ease the cash burn with this outside investment. And there were several few questions that were unanswered. So when President Ching Hong took center stage, he quickly wanted to dispel the rumor that NIO was running out of money. When he talked about this program, a lot of people were saying, is NIO running out of money? But he said, he didn't really answer the question, but he said, infrastructure is everybody's responsibility. Some subscribers were worried that wouldn't this be giving away their moat? Well, no, because, for example, if you franchise a McDonald's, you own that McDonald's store, that location, but it's still a McDonald's. It's not all of a sudden KFC. So all these guys that are joining in, they're building swap stations. Those are going to be NIO branded swap stations. NIO owners can go and swap their Envo, etc., or even these swapping partner companies, car companies, with their battery swappable cars in the future. Some of you guys said that nobody's going to join in on this. Actually, there's been like a lot of instances of this kind of franchising with NIO before, all right? But it wasn't like as polished, or the rules weren't as laid out crystal clear. It was more like negotiation, sort of. You set the terms together. And even when I took delivery of my NIO, I interviewed a former elder NIO owner who's had his NIO for much longer and also bought his other NIO, and he's close to the CEO as well. And he talked about, you could possibly join in on charging or join in on swapping franchises, essentially. And even back in like 2018, 2019, NIO's had partners that have built swap stations out of their pocket money to basically join the network. And so NIO's had this for a very long time, all right? It's not brand new. It's just that they've made the terms more clear, and then they got 3 different methods. Just to quickly briefly recap the 3 different methods. The first one is just basically joining in on charging, all right? It's like any other charging company franchising. You have your own location, and then you have to have an energy capacity, and then you also have to have the construction capability, and then you can basically buy NIO chargers and then build them, assemble them yourself, and then you can basically get in revenue like that. Pretty standard franchise model. But number 2 and number 3 are very interesting. Number 2 is more like a mutual fund, a fixed asset return. And this is going to be very, very interesting. You just throw your money at NIO, and then you're going to be promised a fixed return every year, safe return, guaranteed, and there's nothing to worry about. Absolutely insane. So this is going to be very interesting. So we'll have to see how much revenue they can get from this. I mean, I'm sure big banks in China, they're interested in fixed returns. Energy companies, they would be very interested in fixed returns. So this method number 2 is going to be very, very popular, in my opinion. All right, and that's going to basically shower NIO with money. Yeah, NIO Power. they're going to be showered with money. They're going to be taking in so much revenue for building swap stations, etc. So this is pretty nice. It's basically like a mutual fund, essentially. And then method number 3, which I think is also very nice. You got some skin in the game. You're basically your earnings you have a fixed amount and then plus dividends based on the performance of the swap station. So this is also very nice for people, especially energy companies, etc. And let's not forget, like, one of the biggest problems that NIO is going to face, and I talked about this, is the fact that there's going to be so many different types of batteries. Onvo battery packs, you got the NT 3.0, ET9 battery packs, and then you also got like other battery packs potentially coming. And that just means that if you want the convenience experience, you have to build so many more swap stations. That's the only way to solve it. Build a ton of swap stations. And that's exactly what they're doing. But they're also doing it very intuitively, all right? They're doing it intelligently, not spend their own money, spend NIO shareholders' money. They're spending outside investors' money. And that's very, very nice. So whereas it used to be cash burn to deploy swap stations, now, well, more so now, it's going to be revenue in. That cash burn is not so much avoided, but you got that extra revenue coming in from these battery swap partners, franchisees, and that's going to be the money used to build the swap station. So it does change the picture, all right? You're turning cash burn into revenue, but you're still spending the money though. But at the end of the day, less cash burn is always great news. Essentially, they're just selling swap station and charging station ownership. And you can basically own a charging station or a swap station. So each swap station costs around $500,000 US. So let's say one of these companies decides to build 10 or maybe 15 or even 50 swap stations. There are some partners that have already built like 10, 20 swap stations. And 50 swap stations, that's equivalent to about 25 million in extra revenue for NIO. Absolutely amazing. Instead of cash burn. This is definitely going to help them achieve the target of 100,000 swap stations. And yeah, they are all NIO branded. So this is also going to help out with sales even further. You got maybe a big boss, coal mining boss. He doesn't have that many swap stations in his city, and he decides to build a few in his city as investment for fixed returns. He builds that in his city, then all of a sudden you got swap station in that rural city. There's going to be people interested, and there will be customers buying NIO in that city. So it's also going to help out with sales going into the future. So this is absolutely fantastic news. And method number 2 as fixed returns, almost like a mutual fund. That's going to be very, very interesting. All right, very, very interesting. I'm sure a lot of investment funds are going to be interested in that. That's probably going to be safer than NIO stock. As always, stay safe, stay healthy. Peace out.